G'day folks, Jim here from FX Charts, Thursday the 13th of March. Thanks for tuning in. Well, trade's been pretty choppy really, dominated for the most part by concerns over the economic situation in China and also what's going on in Russia. So the market is pretty directionless really. The Euro's trading around comments from various ECB board members which seem to contradict each other. Yesterday we had a comment sending the euro a bit lower, and today it had the reverse effect, sending it back up to 139.15, the last week's highs. So we're going to have a look at the charts of the euro, and as you can see, we've as I say, we've been up to this 139.15 last week's high. We're sitting just below it at the moment at 139, the figure. Now I'm a little bit ambivalent to what's going to happen here. It could be that we have a double top in place, but we haven't retreated very far from it, so it wouldn't take an awful lot to overcome that. The hourly charts are really rather non-committal, but as long as we remain above support here, sort of 138.70, the 100-hour moving average, then we could eventually move hard to take out 139.15. We actually probably need to go forward to the dailies or even further out the weeklies. We haven't been up here for quite some time, and if really 140 is the next, well, 139.50 is the blue line here, the 50% 50% pivot of the whole move down from above 160. But if we can take out 139.50, then I think we're headed to 140. And as I've said before on the charts, there's not an awful lot above or beyond 140 to stop it going up to the FIBO resistance here at 142.5. So that's a long way off yet, and I'm not quite sure whether the euro's really got what it takes to get up there. And it'll only take the first gun to be fired in Russia, and the euro will come off pretty sharply. But in the meantime, the momentum, the daily momentum is this weekly momentum is looking as though it's pointing slightly higher. The dailies equally, they look as though they want to test the top side as well. So in the short term, while I suspect we're probably in for some choppy range trading, probably below 139.15, I think definitely below 139.50, then it may be that the charts are winding themselves up for a move later in the week or the next week. But for the time being, I don't really see it. We haven't got an awful lot of data out of Europe today. There's really nothing out of the EU. But later on, we've got the US retail sales and business inventories. So if they come in weak, then we might see the US dollar come under pressure again. And that might be a catalyst to send the euro a little bit higher today. Moving forward to dollar yen. Well, the dollar is staying soft. The yen's still in demand because of there's a safe haven destination, as is the Swissy really. But the dollar's finding good support down here at sort of 102.5, and there's good support below that as well towards 102. I'll show you in a minute. But right now we bounced off this 102.5. We're sitting fairly comfortably at 102.70. The 1 hour indicators are actually mildly positive, so we could see a squeeze back up towards 103. I don't think we're going too much higher than that today. The 4 hour charts look negative. Now, if I go out to the Ichimoku dailies, you can see here we're sort of trying to make up our mind whether we want to be above or below the daily cloud. Now, if we do head lower, we've got the Kijun, the Tenkan, and the 100-day moving average all sitting here between sort of 102 sort of 20 and 102.40. So I think they're going to provide some decent support. If we do break down, then we're heading down towards 102 and back towards let me just get the right chart here. Back towards the support at around 180, which is 38.2% of this whole move up on the dailies. As for today, though, I think probably 102.25 to 103 pretty much covers it. There's not too much out of Japan today, but once again, it'll be safe haven demand or a risk on attitude that might take the dollar back higher, but realistically, it looks pretty range bound. Cable Well, that took out the support at 166.05. Stops in both cable and euro sterling drove it lower down to about 165.67, I think was the low. Once they were all set off, the cables returned to where it started, and it looks to me as though we're going to have a fairly slow day. There's not an awful lot out of the UK today. The 100-hour moving average is at 166.60, and then above there, 200 hours at 166.85 or so. I'd be surprised to see this go above there. We might even halt at 166.5 on the day. And on the downside, I think probably this saw 165.85 and 165.70, 67 low will probably cover it for the time being. Further out, the dailies, the dailies are looking a little bit negative, so it could be that we come down and test this rising trend line over the next couple of days. That's down at sort of 165, the figure. I certainly don't think we're going there today, and overall cable looks pretty choppy. And realistically, we've been in a 200-point sort of trading range, sideways range for the best end of 2 months now, and it could well be that just continues to be the case, particularly if the US dollar does come under a bit more pressure. And as I've said before, that does look as though it's got a bit of downside. The downside particularly is shown in dollar Swiss, which has made yet more new lows. It's down around 87.40 at the moment, which, as we said yesterday, is the base of the it was the base of the short-term channel. That's now moved down somewhat to whereabouts, about 87, the figure, yes, down here. So we could see some progress down there, and below there we've got the major channel down around 86.5. Now the 4-hour charts are looking a little bit soft, but until the euro breaks 139.15, I don't think we're going anywhere. The dailies, as I've said before, you know, we're looking at this channel, and then further out on the weeklies, below there, we're looking now to somewhere below 86 cents. So that's some way off, and I wouldn't get too excited about that yet. The Aussie, well, we're waiting for the jobs data today. The Aussie took out all the stops once it broke 89.5, got down to 89.25, spiked down there, tripping the stops, but it's since recovered. It's actually doing all right at the moment, sitting just on the 100-hour, the 200-hour moving average, I should say, at 89.90. Now, it all depends on the jobs numbers. The economists are generally predicting a rise of 18,000 jobs, with the unemployment rate staying unchanged at 6%. I'm not quite sure where the 18,000 jobs are coming from. They obviously speak to different people to the ones I meet, but that's what they say. So anything above that would see the Aussie move back up here to beyond 90, towards 90.20, possibly even to 90.40, but I don't really think so. We've also got China's retail sales and industrial production today, as well as urban investment. So the market will be focusing pretty carefully on those, and if they're soft, then the top side will run out of steam pretty quickly, and we're heading back down here towards 89.25. Now, if we get below there, the rising trend support is down around where this 50% FIBO pivot is. That's down around just under 89 cents, about 88.90. And if we head below that, then 88.40 comes into play. Right now, I'm not particularly bearish. The 4-hourlies look as though they've got a little bit of upside momentum. The hourlies are pretty flat, though. The dailies still look mildly negative. So I think all up, it's going to be probably a pretty choppy trade today, but my own preference would be to sell it. If we saw 90, 30, 90, 50, somewhere around there, sell it there for the next leg lower. But that's about it. It all depends on the data, of course, and so we have to wait until then to see what the outcome is. Now the Kiwi, well, the Kiwis have just raised rates. Now the initial reaction was to a bit of a spike lower, actually. The market was long, took the Kiwi back down to the 200-hour moving average, but then the RBNZ governor said that he can see another 125 basis point rate rise over the course of the year. So the Kiwis moved back up, and it's got up to this 85.20-25 range here, the previous high. Now, if this gets taken out and the hourlies are looking fairly punchy, the 4 hourlies have turned higher as well. If this can get taken out, have to look at the dailies to see that we can get back up here to this sort of 85.40 level. If that gets taken out, then we can move up to this previous high here, which is around 85.80, and beyond that we're looking up at here at sort of 86.75. I think that's some way off, but certainly the daily indicators are suggesting that we could be heading higher. Having said that, the stochastics do look as though they're running out of some steam up here. So I think just be a little wary. And until we take out this 85.25, I'm not getting overly excited about it, because I say the market is a bit long. And in the short term, the Kiwi does look a little bit stretched to me. So that's about it. We'll have to wait and see. The Chinese data and also the Aussie jobs numbers will give the Kiwi some direction as well. So that's about it for today. As I say, we've got the Aussie jobs numbers, the Chinese data, the retail sales and industrial production. Then later on, there's not an awful lot out of Europe, but we do get the US retail sales and business inventories. So it could be a fairly active session later on. Watch out for comments from ECB board members who all seem to have their own view on what's going to happen, and that pushes the euro around more than anything at the moment. Otherwise, keep an eye on Russia and generally on the look at the Chinese economic numbers. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.